And for under 30 today, we are talking TOST. Now, this is an interesting company, and it's fitting our theme today, even if you might not realize, being that they help restaurants digitize their operations and their payments. And actually, they have earnings today after market close. So to help us preview these earnings is George Tsilis, TD Ameritrade Network contributor. George, as we know, this is a space that has been brutally beat up. I mean, names like Asana, also TOST, have just been, really under pressure this year. So what can we expect for this report? Can we expect any sort of comeback for this name?
Well, there's possibility, Jenny. I think this is going to be an interesting one. I'll just address the expectations. But if you just look at the stock price right now, it's $27. The expected move is around $4.50, which is plus or minus about 17%. But that's a one standard deviation move, and we've actually seen at least a 3.5 to 4 standard deviation move in stocks like Facebook. So anything is possible for the stock. I mean, it's trending nicely off the lows in late January, which are around $19, and it's up again about $8 off those areas. But I think it's an interesting company from the standpoint of concept as well as installed base. But it is a software as a service company that actually is focused primarily not just on the broad hospitality space, but restaurants. They offer basically technology solutions that helps integrate front ordering, if you will, front desk ordering, but also back office operations. But the other thing is integration, not just from the standpoint of software as a service that is cloud-based technologies to enhance efficiencies from a customer-facing standpoint, but also from a back office standpoint. I think payment processing is another big catalyst for the company, because if you think about operational efficiencies, companies, restaurants, they want an all-in-one inclusive type of software. In other words, a vertically integrated one, and that's what TOST offers. So it is a pretty interesting company. It is a recent IPO back in September. It's trading significantly lower from its $62 IPO price, but they are expected to come in with about $488 million in sales for the quarter, which is actually above the number from last quarter, which was at 486. But they did beat the expectations by about $31 million, because the estimate for that quarter was around $455 million.
George, let me know if I'm thinking about this right, because you look at names like Square in particular, their kind of core business, their original business really disrupted this. You'd go into a local mom and pop, diner or coffee shop or whatever it may be, and you kept seeing Square technology. But they started focusing on other things, particularly throughout the pandemic period, and really didn't lean into their core business as much. Did names like TOST then take the concept that Square disrupted and then offer in many ways a more personalized, kind of all-inclusive experience for these restaurant companies that, quite honestly, may have cut Square out a little bit?
Yeah, that's the value proposition. I think Square, their challenges is they started moving away from their core business in areas like, payment processing, of course, back office operations, and maybe that's why the stock is down. And there has been significant multiple compression in all these names. But if you think about the integration now, and this is the value proposition, restaurants want operational efficiencies, and they don't want headaches. They don't want multiple systems that create multiple layers of complexity. That's what the value is for this software, which from the standpoint of the United States, at the very least, or North America, they have 50,000 installed base customers or units with 30,000 customers. And they actually processed last year about $40 billion worth of payments. So they're starting to gain traction, and that improves scalability from a consistent EBITDA growth standpoint. And that, speaking of that, the net loss for the company, at the very least last quarter, was about $250 million. This quarter, they're expected to lose about 12 cents a share. And if you actually multiply that by the share count, it's about 60 million. So we're seeing deceleration, if you will, or improvement in the loss-making realm of their line item. But at the same time, this may be a quarter where they're under-promising and over-delivering, much like they did last quarter. Like I said, they're only expecting 2 million more in terms of sales quarter over quarter relative to the number they beat on last quarter. So what I'm suggesting here is that, this could be a stock that is going to go pretty wild after earnings. But the other thing is unfortunately, I can't tell you the direction, because anything is possible in this market. But we are seeing very outsized moves in the technology space, because after all, the technology space may become more in favor once we have a little bit more clarity, and more so in terms of the timeline we get closer to the Fed rate hike. That clarity starts to be built into a lot of these names like TOST and, of course, the other growth names, which are all trading nicely today.
Yeah, and George, just to paint a picture of that downside move we've seen, it shed about 34% in the month of January, so no small move for TOST.
Yes.
But maybe bad news won't be as bad as many are expecting. George Tsilis, thank you so much for joining us on this Tuesday.